Good morning, good afternoon, good evening from wherever you're watching from. Welcome back, everybody. I'm sure if you have been trading for some time, you keep wondering why you keep losing and why you get confused when you are trading. And the answer is very simple. It's because you don't know what you're looking for on the chart when you open the chart. That's the main reason why you keep losing, and that's the main reason why when you open your chart, you get confused. Why do I mean? But you don't know what you're looking for. When you open your chart, you have no idea of what actually you're looking for on the chart. You just open your charts and now you're looking for the setup on the chart. Hey, where is the setup? Hey, where is the entry? You don't have all these things planned in your mind before you open the chart. So when you open the chart, now you get confused. You're supposed to have whatever you want to plan, whatever you want to trade in your head or on a paper, written on a paper before you even think of opening the chart. So when you open the chart, you're looking for only specific things on the chart. If not, when you open the chart, you're always going to get confused. So stick around. If this is your problem, stick around. Don't go anywhere. Stick around and watch this video to the end, and I'll take you through the process you have to go through so that you'll not be able to get confused again. Okay, so that you're able to just trade easily, because trading is very easy. It's hard, but very easy if you know what you're doing. But if you don't know what you're doing, you get confused, and trading becomes very hard. So don't go anywhere. Stick around and let's complete this video. But before that, guys, if you're new here, subscribe to my channel or like my video. Okay, if you're also my old subscriber that you're watching, either you are my mentee, you are my my subscriber you're watching me, just like the hit the like button. Okay, so I just push my video through, because when you hit the like button and subscribe, it just helps the algorithm to push my video through. So do that and let's move on. Okay, so before you think of opening any chart to trade, either you're trading forex, crypto, indices, stocks, or metals, any form of asset you are trading, it doesn't matter. Before you open any chart, you must think of what you're going to trade, as I have already explained. The first question you have to ask yourself is that, which phase is the market in, or which phase am I ready to trade? Which phase am I ready to trade? So some people, their strategies are trend following strategies, which means they must only search for what? Trend following markets. Some people, their strategies are ranging strategy, which means they must search for only ranging markets. But the mistake people do is that they open the chart, they don't know whether the chart is ranging or the chart is trending, and they just start trading their strategies. That is the mistake they make, because it's like in the cold weather, we don't sell ice cream, right? In the cold weather, you cannot sell ice cream because people will not buy your ice cream. The market will not move on. The same way in the hot weather, you cannot sell what? Coffee, right? You can't sell coffee. So you must determine the phase the market is in. If the market is trending, you only trade trend following strategies. If the market is ranging, you only trade what? Ranging strategies. That's the first thing you must keep in your mind. Okay, which phase is the market in? Which phase is the market in? Which phase am I ready to trade? You must ask yourself these questions before you even think of opening the chart. Which phase is the market in? Which phase am I ready to trade? Am I ready to trade trend following? Am I ready to trade reversals, or am ready to trade breakouts? You must think before you even think of what? Opening the chart. That's the first thing. So let's see an example here. So here on this chart, you can see that at this moment, the market was trending, right? Which means the market was trending upward beautifully. Market was trending beautifully. So when you open your chart, how would you know the market is trending? When the market is making what? Higher highs and lower lows. Higher highs and lower lows. That's what determines the market is trending. You know that market goes through only three trends. Either the market will be going uptrend, where the market makes power move, retrace back, make another power move to the upside, and retrace back. The moment you see this, it means the market is trending, right? The market is ready to trend. The market is trending beautifully. Very simple. So you join the trend when the market pulls back to any of these zones, and then you join the trend up. Guys, do you understand? You join the trend. So this shows that the market is trending. And the market can either trend or range. That's all. The market can trend either upwards or range sideways, or trend downwards. So upwards, sideways, and downwards. This is not complicated. Have you seen? It's not complicated. But what makes it complicated is what? Your strategies are going to trade in the chart. That's what makes it complicated. That's what makes you confused. So determine the phase the market is in. The market is trending. Yes. If the market is trending, then you have to apply only trend following strategies. So let's say the market is trending, and you ask yourself, okay, then am I ready to apply my trend following strategies? Yes. Let's say a different phase where the market is ranging. You can see this particular moment, the market was ranging here. The market was ranging at this particular moment. So at this particular moment, are you going to trade trends? No, you cannot trade trends, because if you trade trends, you get stopped out. The market will stop you out and then do whatever you want to do, because the market is what? Ranging, and you're applying trend following strategies. So when the market is trending, apply trend following strategies. And when the market is ranging, apply what? Ranging strategies. Please, do you understand? Do you get the difference? Good. The same way, when the market is also trending, you can't say that, oh, the market is trending, so you're going to apply ranging strategies. Then you just decide to buy. The market will stop you out because the market is ranging here. And then you see that the market is going upwards, the market made upwards move, so you decide to join the trend, right? You know the market was still ranging. See the support line that we drew. Because it's still ranging. So you decide to buy somewhere here and you get stopped out. Yes, the market will stop you out around somewhere here. You decide to buy here and now you get losing. The market will stop you out and do whatever you want to do. So you must first determine the phase the market is in. That's the first thing every trader you must do. If you believe that you're a trader, you are a day trader, then, or you're learning to become a day trader, first identify the phase the market is in, because it's simple logic, right? If you want to start any business, you must determine which phase is the weather in, right? Is the weather in dry season, wet season, winter? You have to determine before you even think of selling any kind of dessert, right? The same way in the market, think of what? Which phase is the market in? Is the market trending? Is the market ranging? Is the market trending downwards or the market trending upwards? For you to be able to do this, you must do two things. One, you must go to a higher time frame, higher than the time frame you want to trade, your entry time frame. Your analysis time frame should be different, okay? The time frame you are going to use to determine the trend will be different from the time frame you are going to use to enter your trade. So we call it multiple time frame analysis, okay? Or multi-time frame analysis. So let's say that I always trade on the H1 and M15. That's what I also teach my students to do. So our higher time frame is what? Our higher time frame is the H4, which means that we go to H4 and analyze the market first. We open the H4 to see is the market trending on the H4, is the market ranging, is the market trending downwards. Then after you determine, okay, H4 is behaving like this, now you drill down to the H1. That is where you're going to make your analysis and take your entries. So you go down to H1 or M15. Now you know that the market is overall trending in the higher time frame. So you open your charts and then you open the H1 time frame or M15 time frame, and then you start looking for your setup. So that brings us to point number 2. You have to find your setup. So you must first determine the higher time frame trend, right? Is the market trending downwards or upwards? Then you drill down to the H1 or M15 to determine where you're going to find your setup. So point number 2, finding your setup. So you must first identify the phase the market is in. Which phase the market is in? What is the weather of the market? The market is just like a weather. What is the weather? Is it in dry season? Is it in winter? Is it in rainy season? What is the weather? Which phase is the market is in? You must first determine that one first. If you apply the strategies in a different weather, no matter how good the strategy is, you're definitely going to have a losing trade. You have a lot of losing trades. Definitely, you cannot evade losing in trading, but if you apply the strategies in a bad weather condition, then you're going to have several losing trades. You get it? Several losing trades because you get stopping out. So first, identify the phase the market is in. Second one, identify your setup. Before you think of trading any market, you must ask yourself, which setup am I looking for? Let's say that you do trend following, right? Which means that you can be having maybe 2 or 3 strategies in your mind that, okay, every time I see a bounce setup, I'm going to take it. Or I'm taking breakouts. Or I'm taking this pattern, I'm taking that pattern. You must have all these patterns in your mind before you even think of opening the chart. You don't have to open the chart and now be searching for, hey, where is the setup? Wow, what is happening here? Where is the setup? No, if you do that, you get confused. You don't make decisions on the chart. You make decisions outside the chart. You plan your business outside the chart, not the chart. You sit down, you plan your business outside the chart. Then when you open your chart, you just take only the setups you have decided to plan to take. So find the setup in your mind first. Set up in your mind first, or you find it on a paper. You have tested it. It should be a setup that maybe you've learned from somebody or you've learned from anywhere that you've mastered already. You've learned and mastered. So when you open your chart, you're looking for only those specific setups before you even think of taking a trade. So say the market is trending, you decide to join the trend, right? If you are joining the trend, what are the ways you can join the trend? You can join the trend using the pullback, right? The market can rather pull back to a support level, maybe a moving average or trend line, and then you join the trend upwards. Or you can also join the market using a breakout, right? When the market breaks out of a higher high and retrace back, then you can also join the trend. So you must have all this in your mind. This strategy can be learned anywhere or from my channel or anywhere, but you must have them in your mind before you even think of opening the chart. So let's see that the market is trending. You decide to join the trend. So you waited for a first pullback. The market did not touch, right? Second pullback, upwards, and the third pullback. The market pullback again. So now your setup is ready. You're waiting to take the bounce. Have you seen? You're waiting to take the bounce. Your setup is ready. So you can enter somewhere here. And then you ride the market upwards and then you take your profit somewhere very good. Very, very simple. But you can't enter here. Why can't you enter here? It's because the third step that we have to learn is that you must identify your entry point. How are you going to enter? You're going to enter in an ambush way. Ambush means that you don't wait for any confirmation. You just, the moment the market just hits your point, you just enter. You don't wait for any confirmation. Or you're going to enter using confirmation candles. So that one too, you must plan it down. Okay, I'm looking for trend setup. I'm looking for this. When the market is ready, when my setup is ready, I enter immediately or I wait for confirmation pattern. In this scenario, assuming that you are entering immediately when the market touches the trend line, then it's going to be very easy, right? You get the trade to take because when the market touches the trend line, you buy and then you ride the market up. Very simple. But in the scenario where you have to wait for confirmation, then you can't do that. You can't do that because you have to wait for confirmation. Here, there was not any confirmation here. There's no bullish engulfing pattern. There's no confirmation, so you can't take the trade here. But assuming your strategy tells you that you have to take ambush trade, then you can take the trade here. So you must have the setup in your mind, right? You must have the setup in your mind before you think of what? Taking the trade. First, identify the trend, the phase the market is in. Second, you must have setup in your mind. And the third point is what you must have an entry criteria. If you don't have these three things, don't think of trading. Okay? Don't think of opening the chart and now thinking of what to trade. If you don't have these three things, don't think of trading. Don't trade. Don't trade the chart in the first place because you don't have the criteria you're going to trade. Let me give you a scenario. Let's say you enter a shop, right? You enter a shop, you want to buy something. You want a mall or a supermarket, you want to buy something. And you know what you're searching for. You just go buy it and come out, right? It's very simple. But if you don't know what you're searching for, you keep roaming and roaming and roaming around the supermarket, keep roaming and roaming and roaming. And you can't even find what you're looking for because from home, from the house, you don't know what you're going to buy. You just have money in your pocket, but you don't know what you're using the money for. So you just said, let me go to the supermarket. You went to the supermarket or you enter the mall and you don't have idea of what you're buying. You get confused. You go and stand there like, excuse me, they say, you go and stand there like a fool. They will ask you, what are you looking for? And you don't know what you're looking for. Because you'll be standing there, you don't actually know, you hold this one and you put it down. You hold this, you put it down. You hold that, you put it down. So the shopkeeper or the attendant will ask you, madam or mister, what are you looking for? So they will see you like somebody who doesn't know what he or she is doing. The same way in the trading market. You have money in your brokerage account, but if you don't know what you're looking for on the chart before you open the chart, you get confused. You end up losing your whole money. Okay, so take only trade about what you're looking for on the chart. When your strategy is ready, then you take the trade. So now let's see more examples on the chart so that become very convenient with it. Okay, so let's see more example on the chart. When you open the chart, you must first ask yourself what the phase the market is in. You notice the market is what? Going sideways at this particular moment. The market is going sideways. So if the market is going sideways, what are you looking for? Sideways techniques, right? Only sideways techniques. If the market is not, if your technique is not sideways, don't trade in the sideways market. So what are you looking for? You're looking for 3 touches, right? You're looking for 1 touch. You're looking for 2 touch, second touch, and then you're looking for third touch, right? After these 3 touches, that's what I teach my students to do. After the 3 touches, your strategy is ready. Your setup is ready. You know the market is ranging because it has touched 3. First, second, third. So 3 touches, which means your setup is still ready. Can you see? Now you are waiting for what? Entry. So we only enter when the market comes back to touch any of the trend lines, either any of the lines, either the top one or the down one, any of them. And when the market enter, we go ambush. We don't wait for confirmation in the range setup. We don't wait for confirmation. We just enter immediately. So when the market touches, we realize that here the market came back. It was about to touch here, but could not touch. Can you see? The market could not touch. We don't enter any trade because the market did not touch. So no trading opportunity here. But you realize the market came back to this zone. Watch out. The market came back to this zone. Can you see? So we put our entry here. You put our sell order here, and then we take our profit to 1:2. Our stop loss behind the pattern, somewhere very cool, and then we are out of the market. Very simple. That's all, guys. So in ranging environment, you trade what? Ranging setups. Don't trade trend following setup. Don't just open your chart and every time you want to trade the same setup. No. So as you can see, this strategy I've taught you, you only trade it when the market is what? Ranging. If the market is trending, don't go and trade this strategy. Don't say every day I want to trade this same strategy. This is my strategy. So when I open my chart, this is what I'm looking for. You don't do that. You only do that when the market is what? Ranging. Then you apply ranging techniques and you trade the market. Let's see an example about maybe ranging or trending foreign. Let's see on the chart what we can get. Good. So you can see that at this particular moment, market kept ranging, right? You can't tell whether the market is reversing or not. So you still have to be patient. The market is still in the ranging mode. You don't take any trade. If you still want to apply the ranging technique, then you still have to apply it. But don't trade trending, because you can only trade trending when the market starts making what? Higher highs and higher low out of the range. So let's move on to see if the market was changing. You can see that at this particular moment, see, the market was still choppy. Can you see? Guys, can you see still range setup? A new range setup just after another range. So people normally think that when the market is ranging, just from ranging it will turn back to trending. No. Sometimes it can be ranging perfectly, then it will switch and it will range unequally. One will be up, one will be down, one will be up, one will be down, and they are not equal. You see this particular range, you see a perfect range. Let me give an example here. Guys, look here. Pay attention here. Can say these ones are perfect ranges, but sometimes the market will not make perfect range. It will move up. See, it will move shallowly down. It will range upwards again as if it's going to trend. Then it will trick you. It will trick you and come back down. Have you seen the range? The range is not equally. These are not equal range. The market is like in a zigzag pattern. So you have to be very careful. Don't think that the moment the market switch from ranging is going to trend. No. The market can do anything it wants. So the market can be ranging or trending, but it doesn't mean the moment it switch from ranging going to trend. It can switch from ranging to another ranging. As you can see right now, it broke from the ranging and then it went to another ranging setup. Or it can switch from ranging to trending, or from trending to another trending phase. It tricks you as if it's going to range, then it keeps trending. You see those examples too. But right now, let's focus on the ranging. Okay, you can see that the market broke from a ranging setup to another range, a new ranging setup. So let's see the new ranging setup. You can see that here, after this setup that we took, after the one we took here, you can see that the market broke out and started a new range. Can you see? This is a new range outside the range we took here. Can you see? This is a new range outside this range. So you can see that it's a new range. So with the same criteria, what are you looking for? 3 touches. One, no, this is the first touch. One touch, first touch. Can you see? Okay, this is the first touch, first, second, and third touch. You want 3 touches on the line. So anytime there's 3 touches on the line, the moment the market come back to any of the zone, we take the trade. So I think the market came back to this zone, we are taking the trade, but you can't enter here. Here was too far away. Don't enter here. Don't be rushing to take the trade. If you enter here, though you will still have a winning trade, but the market can take you out. Don't enter here. The market did not reach it, right? So you can't enter there. So why are you supposed to enter? You are supposed to enter when the market came back to touch, real touch. Can you see the real touch? That's why you have to enter. So you put your buy your sell limit there, here, your stop loss behind the pattern somewhere far away, okay, behind the pattern, and you take profit. You take profit 1:2, and you're out of the market. Very, very simple. Do not rush to take any trade if the setup is not ready. This range setup, the criteria is you only take the trade when the market touches back the 4 times, 1, 2, 3. The 4 times the market touches, then you take the trade without even waiting for any confirmation candle. So can you see? Very, very simple. So market can break from range to another range. It can also break from range to trending. So let's see. Let's continue the chart and see what happened next. You can see the market was still ranging. Now the market breaks the range. So let's see the market going to trend now. See what happened. You see, I told you guys, you cannot just be blindly buying and selling. See, after the market broke from this range, this was the range we are taking right now. After the market broke from this range, can you see what happened? As if it was trending, right? This was fake breakout. Then immediately the market reversed and then broke out the whole range again. So now we are out of the range, right? The market broke out of the range. So here at this moment we are out of the range. But let's see what happened after here. Assume the market has not played. This one the market has already played, so it's easy for you to spot out. But be careful, the market has not already played. Be careful you don't rush. So let's see one by one. Let's move the candle one by one, one by one, one by one, one by one. And as you can see the market came back to the range. Have you seen, guys? Have you seen? You can't be rushing to take any trade. Be careful when you're taking trades. Get good patterns before you think of taking a trade. So the market was tricking you as if it was going to trend. See, it reversed quickly. Can you see? And now you can see the market is trending downwards. How do you know the market is trending downwards? When the market starts making lower lows and lower highs. As you can see here, the market was trending downwards. When this structure was broken, the market made a low. Now broke the structure again and made a low. It was trending downwards. So at this moment, if you want to enter, you cannot just enter anywhere. You must wait for a pullback. So as in the market pull back to this side, somewhere here, then you could have entered the trade and taken the market down. But the market did not pull back. This pullback is not a good pullback you can take. It did not pull back anywhere. So you can't take any trade here, which means no trade. Okay, the market is still trending downward, but no trades, guys. No trade. Let's keep moving. You can see that C, as I told you, the market started to trick you again. I see it's ranging. C, have you seen? Yes. So you must only search for a perfect environment before you think of trading the market. Look at this particular moment. See, the market was making lower lows and higher lower highs. Can you see? So lower lows, lower high, lower lows, lower high. So at this particular moment, first push, then we have second push. Can you see? We have third push. So we're waiting for the fourth one, then we enter. So we have fourth pushback. So we enter here when you get a confirmation pattern. If there's no confirmation pattern, you don't take any trade. Do you see confirmation pattern here, guys? For the trend following, you must always wait for confirmation pattern. I don't like when you enter ambush. I only want you to enter ambush when it is ranging. But if it's trend following, wait for confirmation pattern. You can see that there was a pin bar or bullish hammer, or these three candles combined, 1, 2, 3 combined, forms a bearish evening star pattern. So why are you supposed to enter? You put your sell limit here and your stop loss behind the pattern. Can you see? Behind the pattern, and you take profit 182 and you're out of the market. Don't deceive yourself that the market has played, so it's easy for you to support that. Don't deceive yourself. Okay, it has already played because it's easy for you to support that when the market has already played. But when the market is now trending, be careful. You must only spot 3 patterns, 1, 2, 3, before when the market pulls back again to the zone, then you enter your sell with a confirmation candle. If no confirmation, don't take, because the market can still break out and continue again and trick you again. So don't do that. Wait for only confirmation before you think of what? Taking a trending setup. So now can you see, if you look at how many, if you look at least 3 examples now, let's see if you can get another trending setup to look at. So on the chart, we can see that we took the market down, right? From here, we took the market down 1:2 and you're out of the market. Now, did the trend continues? When the market came back, see, I've been telling you, when the market came back, did you see any confirmation pattern, guys? See, the market came back again. You see the market came back again. There is no confirmation pattern here. Guys, do you see any confirmation pattern here? Are you following? Do you see any confirmation pattern here? There is no confirmation pattern, so don't take any trade. That's why I say in trending, you must always wait for what? Confirmation pattern before you take the trade. Can you see? There was no confirmation pattern here, so if you took the trade here, you would have had a losing. This market would have stopped you out. Yes, it will stop you out because there's no confirmation pattern and you took the trade. So wait for confirmation pattern before you think of what? Entering a trade setup. So see, the market broke the structure. See, but still the latest high was not broken. See, it was not broken, which means the market can still trend downwards. So you can see the market continue to trend downwards, which means it is from trending to another trending market. You see, I told you, from ranging, it can change to ranging market. It doesn't mean immediately from ranging, then you change to trending. No. It can move from ranging to another ranging market, or from ranging to trending. The same way, trending to can move from trending to, it build a structure as if it's going to reverse, then it reverses back to the trending market. That's why you always get stop out. So be careful, okay? Learn how to read the market mood. The market mood first. The market mood first before you think of searching for your setups. So you can see that the market broke and then continue to trend, which means from trending to another trending market. Can you see? Yes. So where are you going to enter in the trending market? Where are you going to enter? You're looking for pullback. So you get one pull up, pull back. Can you see? Another one downwards and another pullback. But you can't enter anything here because there's no confirmation. So though the market went down to your favor, but you can't take any trade, guys. Trade according to your plan, okay? Don't be rushing to take a trade. So there's no confirmation until you have to wait for you get a confirmation. If not, you don't take any trade. As you can see, the market kept trending downward, kept trending down until the market came to touch. And here, there is still no confirmation pattern anywhere here. You can't take any trade. But if you're my student, you can take breakout continuation trading strategy, right? You can see that here, the market broke out of the structure. Can you see? At this particular moment, there was a breakout here. See, breakout from this whole structure. Breakout. So wait for market to pull back to any of the zone and then you enter. So this was a breakout. So there's a breakout here. Breakout. Can you see? breakout, and then you wait for a pullback, and there was a confirmation. Can you see the confirmation there? Can you see? Let me put this one back. Can you see the confirmation there? Yes, that is what? A bearish evening star pattern. And then you take your trade, you ride the market downwards. So you put your sell order here. And then your stop loss behind the pattern, and then you take your profit 1/2 out of the market. Can you see? So you see, we're looking for either the bounce or the breakout. So you must have at least 2 or 3 strategies you're looking for. If this happens, you take the trade. If this happens, you take the trade. So that would be all. I think we've covered enough. Go to your chart, okay? Open your chart and test what I've taught you right now. Open your chart and start testing. Practice and practice, because practice makes perfect. Don't put your money in the market and then before you look for a strategy to trade. No. Look for strategy before you think of putting money in the market. You must have a business idea before you think of what? Investing in the business. The same way in trading. You must have what? Strategy and everything set up, written down, proper written plan before you think of using your money to trade the market. So that will be all for this particular video. This is Owas, your mentor, and I will see you next time.